Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review, an April for the record books. Well, April certainly was a wild ride for the stock market. President Trump's tariff announcement on April 2nd triggered a sharp decline in the S&P 500 index, falling more than 11% in just a few days. At one point, the S&P had fallen nearly 20% below its February record. But after the initial drop, Trump announced a 90-day pause on some of the tariffs, which led to a significant rally. The S&P closed out the month roughly 15% higher than its April 7th intraday low. Overall, the index was down less than 1% for the month, almost as if nothing even happened. For this week's featured insight, stick to the plan. Regardless of what happens in the markets, stick to your investment program. Changing your strategy at the wrong time can be the single most devastating mistake you can make as an investor. That's a quote by John Bogle, the founder of Vanguard. Now, I've given similar advice many times on Investor's Edge, and it rings true yet again, given the market's price action in April. Allowing market volatility or emotions to drive your decision-making will nearly always result in poor outcomes. Just think if you had sold your stock holdings in the early days of April after the markets plunged in response to tariff announcements by the Trump administration. You'd have missed out on a rally in the S&P 500 of close to 15% in just a couple of weeks. In the short term, markets will confuse and confound investors, but a solid long-term investment plan stands the test of time. Looking ahead, should you sell in May? There's an old market adage that advises investors to sell in May and go away. But should investors really heed this advice? I'd say not so fast. May has shown a gain in the S&P 500 index in 9 of the past 10 years, with an average return of roughly 1%. And even though the May to October period has been the weakest 6 months of the year on average going back to 1950, it has still averaged a positive return of nearly 2% and higher roughly 2/3 of the time. More recently, the May to October stretch has been quite good for stocks. In the past 10 years, it has averaged a return of 4.6%, higher 80% of the time. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.